If you are an Nvidia shareholder, this episode is going to show you the strength this company has and some recent updates impacting the overall industry. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so first, let's just start off with Nvidia. Right now, we can see on Friday, the stock closed at $180. In the past 5 days, the stock is pretty much flat. Year to date, the stock is up over 30%, which is doing really well compared to the overall market. Now, one of the things with Nvidia is this is a company that's really focused in the AI space, and this is a market that continues to innovate. Now, the first topic I want to take a closer look at, and throughout this episode, we're going to look at things like price targets, their 13F, some interesting kind of updates from various analysts as well. So there was a meeting by The Verge, or an interview by The Verge from Sam Altman, and especially the GPT-5 launch, and how maybe it wasn't the best thing. Now, one thing that I found pretty interesting is when he talks about GPT-5 and some of the rollout, he mentions that they totally screw up some things on the rollout. On the other hand, our API traffic doubled in 48 hours and is growing. We're out of GPUs. ChatGPT has been hitting a new high of users every day. A lot of users really do love the model switcher. So to me, as a semiconductor, as an AI investor in general, we continue to hear the same story, that this is a compute constraint market. Now, the best thing to hear from any type of company like this is they are out of GPUs as one. Obviously, these models need more compute, but more importantly, more users are becoming familiar with AI solutions. So I think both of those are a great tailwind for the semiconductor industry. Now, if you have been following this episode or this channel, you guys know that I mentioned and teased list of companies that are known as PowerShells that are very crucial for the AI infrastructure. I just want to say I'm not skipping out on that video. That video should be coming out in the next 2 days. I've just been on travel. It's funny, right now I'm actually on my hotel bathroom recording this episode while my little one and my wife are sleeping. So I'm just trying to get the better concept, the better information for that video, and I should have it out within a day or two. So keep watch for that. So make sure to subscribe or hit the thumbs up if you haven't, as we're going to provide a great list of PowerShell companies, which we've heard is one of the crucial markets that is super constrained in the AI space right now. Now, the second thing I want to take a closer look at are some price target upgrades for Nvidia. So if we look here really quick, in the past day on August 13th, we actually got 2 price target updates. So we had Mizuho Securities upgrade their price target on Nvidia from 192 to 205, and this is a company that continues to increase. We can see on July 16th they capped it at 192. Just recently here on August 13th they did increase it to 205, but it's been a company that has at least since 2025 been increasing this company's price target for a nice amount. Now, there was another analyst, Piper Sandler, who did upgrade Nvidia's price target as well from $180 to $225. Again, another very bullish market right now. Most of these companies did kind of see a negative on price target after maybe some of the issues with the China market, with the kind of export restrictions. But now that that market is picking back up, now that we're seeing more demand in the AI solutions, a lot of these analysts are also upgrading the price target. So those were 2 popular ones. Now let's kind of jump back here to some other information. So first we got kind of the very bullish sentiment from Sam Altman about GPU market. Then we kind of got those price target upgrades. Now, there are some Morgan Stanley research floating around the internet right now that is talking about 2 concepts of that AI investors should be familiar with. So Morgan Stanley has this research talking about the total cost of ownership for AI inference for a 100 megawatt AI factory. So something like this, higher is bad. It means that it takes a lot more to a lot costly to kind of run that business. And we have here the Hopper 200, the GB200, the TPUs version 5, version 6, MI300, MI355, Cloud Matrix, which I believe is Huawei, and Trainium 2, which is Amazon. So the first thing you're going to see is the two most expensive to run are the GB200 NVL72 and the MI300. Now, the two cheapest to run are actually the ASIC solutions, the 330 from Trainium here, and the TPU version 6E from, so one was from Amazon and one was from Google. So if you were to look at this chart alone, it would be like, hey, look, this is a very bearish flag for Nvidia. It showcases that the ASIC market is the right direction to go. But Jensen has mentioned it really well in the past that it's no longer about the total cost of ownership. It's about the total cost of ownership, but it's also crucial to understand which is making more revenue, especially if you have a market where you are power supply constrained. Now, in forms of profitability, and Morgan Stanley research kind of showcased this. This is the green is their profits, and the blue is their TCOs. It kind of shows who is the biggest revenue maker. So while Nvidia's GB200 NVL72 is the most expensive to run in forms of total cost of ownership, it's also the biggest revenue maker by far and has the higher margins. It has about 77.6% margins there. So even that's why total cost of ownership is no longer the picture here, especially when you're selling tokens, which is what's happening here in the AI infrastructure. And I thought that was pretty interesting. The second most profitable is actually the TPU. The TPU is pretty profitable, but in forms of revenue maker, you're not making much revenue compared to the GB200. Another one that's also profitable is the Trainium 2. I do want to say, I believe the TPUs and the Trainium at least do have better scalability than some of the AMD solutions, and that's why AMD's actually is on the negative when you're kind of building these massive racks. Like TPUs and Trainiums can both be used for training and heavy inference, something that AMD might be lacking off a little bit, where you're only really connecting 8 chips together. So that's why we kind of see this negative from Morgan Stanley on the MI355. And again, this is for 100 megawatts AI factories. The story might be different for smaller workloads, for smaller GPU size, but it tells you one thing. If you're looking for who is going to be winning the big customers for big training sizes right now, it's most likely going to be Nvidia's GB200 platform. So I thought this was pretty cool, and it kind of showcases that it's no longer just a total cost of ownership market. It's about who's making the most revenue and who is the most profitable, and the GB200 is the king of that. Now, another kind of research that's popping along is from Fubon, and it kind of talks a little bit about the ASIC roadmap update. So it kind of gives us of what companies are doing what and with what design player. For example, Trainium 2, we know it's Marvell. Trainium 3, it's reported by Fubon that it might be AI chip with Marvell. Trainium 4, very similar. Now, Microsoft, we can see it's Marvell and Broadcom for some of their new solutions, a mixture of both, sometimes both. The one that I thought was pretty interesting is Apple. Broadcom has a lot of players, a lot here. But the only ones that are really making money for them is going to be Google. But we can see they have Meta, they have ByteDance, they have Apple making their own AI chip. They have OpenAI for Trainium, but Marvell actually has it for Inferentia, which OpenAI is making. So if you want to pause this slide just to look at this, and it kind of gives you the information of when they might be coming out and when you might see some of that revenue coming for those players, it's pretty cool. As a Marvell shareholder, I really like that it is reported by Fubon, and that's the unfortunate thing about this market, we really don't hear who the customers are. We have to kind of guess, and analysts kind of give us some of their thought process as well. So Fubon Research does believe that Marvell won the inference, not inferentia, the inference chip from OpenAI with ARM. So pretty cool there. Now, what is the next thing I want to take a closer look at? So there were some comments here from Nomura shared by Ray Rang. This kind of overall mentions the following, that right now they forecast the AI semiconductor revenue market to grow 55% in 2026, and their prior projection was 30%. So they are getting more bullish on the AI space and continue to grow in 2026. The other thing is they do expect Nvidia to continue to hold a massive amount of CoWoS capacity there. They're also expecting, I'm not too sure about this, for a forward launch of the Rubin platform. So that's interesting. The only other one that's taking a nice amount here seems to be TPUs from Broadcom. Not any other chips from Broadcom right now. So Google with the TPUs are doing really, really good. The final topic I want to take a closer look at is Nvidia recently released their 13F. And I actually wanted to compare it to their 13F from a quarter ago. Now, there were no real changes. No new companies were added and no companies were sold out. But Nvidia did add a very, 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 very small position in CoreWeave. I would say the position is so small, I don't think Nvidia is actively buying. Maybe they just had maybe some buy orders that didn't go out until recently, or maybe through some of the partnerships that they're doing, they were also kind of given some shares as well. So there could have been a few things that happened there. I don't think Nvidia is actively buying CoreWeave, but this is their biggest position. We can see that about a quarter ago, this was less than a $1 billion position, but with CoreWeave stock price kind of jumping up much higher, it's closer to $4 billion. But this is when that period ended, and CoreWeave stock price has definitely declined a nice amount, I believe, since these numbers were used to calculate the actual value. Now, though, speaking about CoreWeave, I keep getting questions. Jose, do you think CoreWeave is a good buy here in the low 100s? I think the answer is, if you're liking the risk of obviously a high debt company, even though above the growth opportunity of this AI space, I like it at a market cap of about $50 billion. Like I talked about it in the past, if I was to be buying, I wouldn't mind dollar cost averaging here. I personally prefer, what I would do would be selling like a put, and then getting some premium off that. The premiums right now for CoreWeave are pretty high. And if I get exercise, that would be great. If not, I'm still collecting a premium off those puts. But I definitely do like CoreWeave here, a market cap of about $50 billion, sitting at these levels, right? It doesn't scream extremely overvalued. Obviously, there's been a lot of excitement, but I do believe if CoreWeave and if this AI market doesn't mess up, obviously if there's some slowdown and that debt doesn't get paid off, or they have a quarter where they miss something dramatically, which can kind of cause a big hit on their free cash flow or the way they're going to be able to repay some of that debt, that could create a massive sell-off. So that's the big risk. It's a rocket ship. I do believe CoreWeave is a rocket ship, and I don't necessarily mean that in a good way. I mean that it's a rocket ship, that this is a rocket science, and any small mistakes could create the rocket to crash. The other thing is, if everything is timed perfectly to make a rocket, you have to be perfect in everything. But if it is executed, you can go to definitely new levels. And that's where I see CoreWeave right now in that position. So I think those are all the topics I have right now in forms of CoreWeave. There are a few updates. It does seem like Cathie Woods and ARK are buying CoreWeave. You could see that as bullish or bearish. You also do have indications that a lot of their capital expenditure is coming in quarter four. Quarter four is when the GB300 should be already shipping out. So the market is expecting that this is going to be a big revenue maker for them as they start to pull out the GP300s at rapid levels. Now the lockup period is over, so you could see some sell off as maybe insiders continue to unload on some of those shares. So some of the things to consider here with CoreWeave. So I hope you guys enjoyed today's episode. If you are kind of an Nvidia, Marvell, and CoreWeave, we did consider and talked about a lot of different topics here. So take care, have a good day, and see you next time.